warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos. And I'm Grace Agbaragu. It's Wednesday, the 19th of November. We thank you for joining us at this time on the show. All right, let's tee off with your news now. President Cyril Ramaphosa has today met with South Africa's leading CEOs ahead of the G20 Leaders Summit, holding strategic discussions on investment, competitiveness, and South Africa's priorities on the global stage. The engagement forms part of government's broader efforts to align business and national positions before the summit. Let's take a listen.
Now, at this meeting that we are going to hold with the African leaders, I hope to showcase the extent and the scope of investment by South African companies in the various African countries. Now, this will be an opportunity to reaffirm the commitment of South African companies to the development of the continent. We will reiterate our shared responsibility to create conducive and enabling conditions for doing business in each other's countries. I've held the belief that we do need to meet as African leaders to discuss the various issues that are troubling to business, and not just discuss them in a theoretical way at the AU Assembly, but to discuss them amongst ourselves, having heard from business, but also create an opportunity where business will be present so that business can talk to African leaders. And we will create that opportunity, having started this process. We acknowledge the work that has been undertaken by the B20 to connect the business community with governments. Many of you gathered here have made significant contributions to the B20 deliberations during our G20 presidency. And I've seen that as a great contribution. And it hasn't only been the B20. We are actually president of a very unique G20 process, much as it isn't much appreciated elsewhere in the world.
In North Africa, SGTM, one of Morocco's leading construction firms, has received approval from the AMMC to launch an initial public offering on the Casablanca Stock Exchange. The company plans to raise 5.04 billion dirhams with the subscription window set for 1st to 8th of December. SGTM, which operates in Morocco and 6 other African countries, says the IPO will help strengthen its market position, boost transparency, and support its expansion plans across the continent. In Uganda, building sustainable coffee value chains is in focus today as Uganda addresses its compliance with the EU deforestation regulation and what it means for the country's industrial future. The forum brings together producers, exporters, policymakers, and development partners to examine how Uganda can meet new EU standards while positioning its coffee sector for value addition, job creation, and stronger global competitiveness. Here are excerpts.
The European Union Deforestation Regulation is part of the EU Green Deal. The EU Green Deal is looking at a climate neutral economy, but also a competitive EU economy. So the EU Green Deal has a cocktail of policy tools, all measures, including the EU DR. I will use the word EU DR because I already substantiated about it, that it is the European Union Deforestation Regulation. So allow me to use the EU DR as I continue with the remarks. But what I'm trying to emphasize is that we are required as a coffee exporting country to the EU to confirm that we did not cut trees. And there is a lot of guidance. We've heard from government that there are a number of approaches government is taking, the territorial approach of ensuring compliance. But beyond those technical jargons, the fact is that the coffee sector is very important. It employs a number of people. And what is actually more important is that 12 million people, Ugandans, depend on the sector, because we might need to go beyond the people who are into direct coffee growing production, but rather look at the spillover effects, that how many people depend on the coffee sector. The estimates are that 12 million people, Ugandans, depend on the coffee sector. And the conversation around coffee is not a Ugandan conversation, but it is also a regional conversation, because different countries in the East African community also grow coffee. And it's not only a regional conversation in terms of the ESC, but it is also an African conversation, because Uganda is one of the top coffee exporters in Africa.
In Congo, Heineken has agreed to transfer its Bukavu brewery in Eastern Democratic Republic of Congo to Mauritian firm Synergy Ventures Holdings Limited for €1. The handback, expected by year-end, aims to safeguard jobs, maintain community services, and prevent misuse of the facility in the volatile region. Synergy Ventures will assume full responsibility for operations, employee safety, and tax obligations, while Heineken retains a 3-year buyback option if conditions allow viable operations. Heineken's Congo unit Bralima will continue operating in other parts of the country unaffected by the conflict. In earnings news, KCB Group has reported third-quarter results, with profit after tax rising 3% to 47.3 billion Kenyan shillings. Total assets increased 2.6% to 2.04 trillion Kenyan shillings, while loans rose 8% to 1.1 trillion Kenyan shillings. Customer deposits fell 1% to 1.5 trillion shillings. Net interest income grew 12% to 104.3 billion shillings, while non-interest income declined 10% to 45.1 billion shillings. Loan loss provisions increased 3% to 18.3 billion shillings, and non-performing loans rose 3% to 222 billion shillings. Earnings per share were up 0.6% to 19.12 shillings. In Ghana, the 2026 PwC Ghana Post-Budget Forum is underway, bringing together policymakers, industry leaders, and economic analysts to break down the country's latest budget. The session features insights from the Minister for Finance, PwC experts, and key industry voices as they assess the policy choices, reforms, and opportunities shaping Ghana's economic outlook for the year ahead. Let's listen.
The improvements we're seeing in the 2025 fiscal data is largely driven by a sharp moderation in government spending, particularly in debt servicing and public investment. On the revenue side, performance has been pretty solid as well. So domestic tax receipts were only slightly below expectations in the first 3 quarters of 2025, and that is mainly due to softer personal income tax and VAT collections. However, other direct taxes, which includes mineral royalties, outperformed significantly, I think coming in roughly 16% above target, almost certainly supported by the record high global gold prices we're seeing this year. So with revenues holding up and spending tightening, we expect the budget deficit to narrow substantially from 7.9% of GDP in 2024 to just 1.8% in 2025. And you can see that on the chart on the left here. What you can also see on this chart is that in 2026, so next year, we forecast that the deficit remains small, but will widen a little bit to 2.8% of GDP. And there are really 2 main reasons for this widening, right? The first one is the changes to the VAT regime that are detailed in the new budget. So the scrapping of the COVID-19 levy, along with a broadly lower effective VAT rate down from 21.9% to 20%, will somewhat constrain revenue intakes. And then second, we're going to see higher infrastructure spending next year. So the government's flagship Big Push infrastructure program will proceed as detailed in the budget and will drive the recovery in capital expenditure next year, resulting in a slightly larger deficit. So if we then quickly look at the medium term, so the years beyond 2026, we believe that the deficit is going to remain largely contained, although we do expect a widening in 2028 as the general election is likely to result in some level of fiscal slippage, which is often the case in Ghana. The improvements.
Finally, on news now, Zambia is set to host a Chinese premier for the first time in 28 years as Beijing moves to dipping ties with the copper-rich nation following its exit from a prolonged debt crisis. Premier Li Qiang arrives in Lusaka on Wednesday, with China seeking to strengthen its position as Zambia's largest official creditor, to whom it owes $5.7 billion, and to expand trade and investment under the Belt and Road Initiative. The visit comes as Zambia looks to attract new investment for mining, infrastructure and industry, with economic growth projected by the World Bank to hit 6.5% in 2026. I am Melissa Enoch, and that's it on News Now this Wednesday. The show returns shortly with Grace at the FMDQ Archives Room giving us our markets updates. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there, Grace.
Hi, Melissa. Let's now track how the markets traded today, starting off with the equities. The African equities traded negatively today. The Nigerian Stock Exchange slipped 0.23%, while the